What's going on, everybody? Trade to Bless back again for video number 2. Back to back, we're on a streak. These are today's accounts that I traded. I traded only 4 of the accounts that I have. Again, like I said yesterday, these first 6 are funded accounts. This last one is in evaluation, which is getting really close to getting funded as well. Just putting in some trade days. Very tricky day, so I'll talk about that. In my opinion, today was pretty tricky because of the news before the market and during the market open. And so it took lots of break-even trades, several losses on this one, and but again, it ended up green, which is great. It's nice to have. Obviously, we can't control where the market's going to go or when the market's going to go there, but we can take some really good estimates based on some bias. So bias, locations obviously all matter, and entries and management of trades all kind of play a role in profitability. But let's look at, just like we did before, like I said, I don't really do a lot on the daily chart, so I start on the 4-hour time frame. This is the 4-hour time frame. Yesterday's bias, in my opinion, was a bit neutral, and you can go back and watch that video. But now that we've put in more 4-hour candles, I started to get a little bit more of a bullish bias because we have this imbalance right there. And that imbalance, or fair value gap, whatever the heck you want to call it. Where's my pen? That imbalance right there gets respected over and over again. So in other words, it never gets inversed with any of these candles. It does not close a candle that inverses this gap or imbalance, which makes me think that we potentially could move up a bit. And so before the market, there was one of the big news. I can't remember if it was the NFP or whatever, but it's going to move the market, which, then you start having some volatility that doesn't always respect some of the things. When there's news, some of these areas don't get respected as precisely. In other words, they'll overrun places and whatnot. And then at 10 o'clock, there was some more news, something about the Supreme Court, tariffs, blah, 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 blah. So I'll show you what I have. So let's go to the 1-hour frame. So a little bit of a bullish bias here before we get going in the market, even the before the market open news. And then here's the 1-hour. And so let's go back to boom. Oh, we got 5, 6, 7, 8. Yes. Where are we at? Here is the market today. So, okay. So that's 8 o'clock. This is what we're looking at as the market is about to open. We have the next hour when some of the pre-market news happens. Again, these are all the places where the market tried to drop and never really closed that candle inside that 4-hour imbalance. And so we have some bullish bias. It in fact popped up into then, right? Some recent highs, right? And kind of respected those. So we're just kind of paying attention. All we can do is observe, right? We can't tell the price where to go. If we could, we trade one day and use all of the leverage, right? So we're kind of going in and going, all right, the market has gone to these highs. It has respected these lows. We could be ranging a little bit of a bullish bias from the 4-hour time frame. But again, we're going to wait and see what the market's going to do. And so then we can see where the market is at. Obviously was bullish in the end. It did come and sweep the bottom of the pre-market hours, which is a great place to trade. And I'll show you what trades I took with the markers on there. And then after the 10 o'clock news, there was another drop, and eventually the market's ripped. And right now it's like at the day high. So let's go back to, again, if you're new here, this is the 15-minute low after the open. That's the 15-minute high after the open, which is the opening range that I take a look at. This is VWAP right here, which I absolutely take a look at. If I am below it, and I have some momentum, I will try some short side type of things earlier in the day. Otherwise, I'm looking for retracements to then short, this is pre-market I did not take, but this would look like a very nice, after a nice drop, we have a retracement below VWAP. That would be probably a good place to look for if you're looking for just a pattern standpoint. But there's more than just candle patterns, right? Locations are important and all that stuff. If you're looking for market lows, then you have them marked out on your chart. Go pre-market lows, pre-market highs, trying to figure out where those sweeps might happen. So let's go back into this here. This is obviously some pre-market low areas in here, and we swept them, right? So those would be good places where you're like, okay, if I am short here, right, which I was short in that candle. If I'm short here, I want to be out at the sweeps here, because the risk reward starts to make less and less sense. You'd be, shorting into a place where you're going to likely get a bounce, right? So that's kind of what my thinking here, right? So we got a place where we're sweeping lows. Now I'm looking for that bullish bias to pay off, where I can maybe take some longs, and obviously there's some going into there. Once we get into establishing a new high, now we have more of a balanced look, and we have to go, okay, if this is the 15-minute low, this is the 15-minute high after the open, right? Do I then, buy pullbacks into VWAP, or do I wait for a retracement into some of these imbalances, right? Like we have imbalances in here, we have imbalances right there, we have an imbalance right there. So like what it means is, right, fair value apps, whatever, you can go watch a million YouTubers trying to talk about that. It just means that it distributed higher much quicker than people could potentially get in and do what they needed to do in here. And so it would likely revisit these areas to give an opportunity to balance these areas where mostly it was buys here and move the market up. And so we expect something like that. Now, this starts to get close to news time, and I'm going to start probably taking less trades going into that after a big candle like this. This is still before 10 a.m., but I am very cautious of these types of moves. This is big volatility. The ATR, average true range, right around this time was probably over 30. So you got to watch your size so you don't get run over. But then after a move like this, as you get into 50% of that candle and VWAP, I potentially would look for shorts, which I did. This one, not big, again, not big winners. We got multiple shorts, a couple of, buys below those short markers, which is essentially like some break even, a little bit of money. I mean, you saw the P&L for the day. We were successful, but, I think a tricky day. For as many trades as were taken, I would love to see a little bit more green in those accounts. But again, news does that. Like this is a massive, let's see, 62s to 88s. This is like an 80.1 minute candle. So again, you got to watch your step, kind of know what you're looking for. But it would make sense from a technical standpoint that this imbalance would then be redistributed with some more action, right? So it comes down here. It gives an opportunity for people to do what they got to do inside this candle, right? And then it's going to do something else. Going into 10 o'clock, take my last few trades. Got some shorts. They got long there. Got a short there as it reaches into this bigger, right, demand, supply area. Rips in there. The short's at the top there. The buy's right at VWAP right there. That's a nice little move there. Maybe 20 points or so. I'll take that all day, every day. That's a good $400 on just one contract. So then as we get into the 11 o'clock, obviously you'll see blank candles the 10 o'clock, because there's the news happening, and I'm just going to watch and see what it's going to do. Pick a direction and see if there's any edge anywhere, if there's a location that makes sense to get involved with the market again, or if it wants to rip in one direction and violate a bunch of areas, I don't want to necessarily be involved. The market here, 10 o'clock happens, rips down, rips up, and then finally makes a move to the low side. You could potentially look for sweeps of lows to get long again, especially if your 4-hour bias was to be long. This one even swept the low of the day, right? Again, no trades for me. I'm still trying to figure out, is this crazy news momentum? Are we going to rip and liquidate? Because that's very much on the table in news days like this. Again, the high here is 60s, and this one goes 760, 660. This is 140 points in 1, 2, 3, 4, 5, 6 minutes, 7 minutes, something like that. All right. Now, once it starts recovering, right, we had this big, massive move down, right? We're going back to the VWAP, and I see it peaking again against that area. Did take a couple of shorts. Those didn't really pay off a whole lot though, right? The area's good. The trades are probably good. Couple of shorts and then just about inside break even, making $20, $50, whatever that is. So tricky day for sure because of the volatility was there. Managed to stay, positive on the day because the management is there. I am not going to let a move that goes in my favor really nicely, end up in a full loser. That's not what I'm into, right? Once it starts respecting this area, right? You go, okay, well, it already did what it wanted to do in here. Then maybe we can get a move higher. And we remember we had a little bit of that bigger time frame bullish bias. So maybe we take some longs on a pullback. And then once we violate the high of the day, maybe we go, okay, is there an exhaustive move that I can pull back? Again, I'm not giving you specific entries or I'm just telling you the thought process as to how you come up with a thesis for what you want to trade. People that give you a simple solution like at these 3 candle patterns, buy here, stop here, whatever. It's like there's some of those things that can be good and helpful, but mostly you have to come up with your bias and your thesis. What is it that the market is doing? Is it sweeping liquidity up here? Like, is there a bunch of stop orders that it's going to sweep and then, come back into a balance kind of thing? And you want to try to take advantage of that. Is that your strategy? Also, the move here is an extra, whatever this was, what did we say it was 140 points? It paused at 140 points and then it put up another, whatever that is, another move up. So would it make sense that it would retest that? Again, in the moment, in retrospect, we can make a whole bunch of really smart comments on the market, but in context, in the moment, right, you're going to have less of that information. So it did not come back into balance and essentially did a little bit of a breakout into areas to the left. I took a couple of more shorts. Again, some break evens. This one, obviously, a break even. So there's 2 sells here. One got stopped out for a loss. One paid off really nicely. And then again, now I'm starting to go, okay, do I then wait for a pullback, right? So you start seeing some blank candles. I'm not taking trades. So I'm trying to figure out, do I then take another trade a bit later, right? Where it would make sense. And so you start seeing, as we get into the top of the range on the 15-minute or the 15-minute opening range, we start getting involved again where it would make sense to get some reaction, right? And there's your reaction. Another rip into a supply zone, intraday supply zone, short there, buy there, whatever this is, 15 points, something like that. But obviously the strength was there in the day based on that 4-hour imbalance. And I stopped trading right around 11, whatever that was. But essentially now we're back at the high of the day. Does the bias have to be exact or perfect or, do you? No, but it gives you an idea of what the market is likely to do if it respects this type of imbalance. It's like, hey, no, man, like these wicks down here already did the redistribution of that gap or whatever you want to call it. And then it started distributing higher. Then, it's like, okay, well, the bullish bias is there. They're not allowing it to close and inverse that imbalance or gap. Therefore, we should see higher prices. We should see higher prices. So if that's your bias, at some point you start taking the trades that you can in the direction of the bias. But again, even intraday against the bias, if you have a good management model, a good entry model based on understanding of where people are trapped, where people need to get out, where people are going to place their stop losses. Because again, 96% of people that lose money in the stock market, it's because of these very things, like a misunderstanding, buying every breakout, buying every breakdown, or selling every breakdown. Whereas, people are, for example, see this big move up, they missed all of the opportunities to get long where it would make sense, right? Like in this area here, where the heck is my frame here? In this area right here would make a whole lot of sense to get long, right? This was new, so I didn't do that today. But when we're essentially, we got people that maybe bought here, have their stop losses there. Boom, it violates those stop losses and rip. Like where people had their stop losses would be a great place to get long, but it looks super scary. And if it was not a news day, you better believe I'm interested in this area. I'm interested in the breakdown, the sweep, but the volatility made it a non-starter for me. Like the volatility is going to make it so that I cannot get long there because we got these huge candles, and so it makes it for a tricky environment to trade. So though it's a tricky environment, it is possible to still pull some green out of the market, and just it's all on that management side, the risk management. Take those tiny losses or break evens, and when the market, on a good entry, on a sweep or something like that, starts running in your favor, that's when you allow your stop loss to be in the money and continue trailing, so that you can make something out of that with minimum to no risk on the table. So I hope that these, just like the speaking about it, just having a conversation about how to think about the market gives you an idea of how to trade a little bit more like smart money people, right? You don't want to be the guy that's buying in the worst possible area, right? Tons of people getting involved in something like this where like big candle, big candle, big candle, big candle, and then you get to an area of like supply up here. That's not necessarily the best place to buy. Like if you know that this market is going to do that, in retrospect, you'd be like, of course, I bought right here and I sold right there. Sure. And people talk about that on the internet, right? They go, yeah, look at the beautiful thing I did. I bought here, I sold here. Yep, sure. My behind that you did that. Because when you start looking at the market like this, you get a rip that sweeps these recent highs and into a place where there was some supply up here that created this move. You should see a little bit of a pullback, at least, if not a retracement into these imbalances. That is what we expect. So if you're going to get short, which I did, if you're going to get short here instead of buying here, it would make sense that you would see some kind of pullback like that. Now, you don't overstay your welcome. You take whatever you can. 15, 20 points is good to go. Could it have then, so after I got out right there, could it have then dropped another 50 or 60 points? Sure, it could have come to revisit all of these imbalances, but I don't know that. So I'm going to take what I can. I'm going to manage my risk. I am a risk manager, and then I'm going to see what other opportunity it gives me. And thankfully, I would have taken a full stop loss on this move if I just was stubborn and say, okay, well, I'm going to short here, hope for the low of the day, and put my stop above the high of the day. That's a full loss. So cannot always avoid losses, but you can get a good sense of how to get a few more winners by entering a little bit more precisely where people normally have their stop losses. And I think overall, over a long period of time, you're going to have many, many green days and just a whole lot less red days, and you just keep building those accounts. That's why the prop firm trading game is so good these days, right? You can, with very limited risk, you can leverage good, healthy size accounts and keep building them up, $400 here, $500 there, $1,000 there, even $100 a day on some of these accounts. I'll take it. On 3 of these accounts, I didn't even trade today. The market was just a little bit tricky, and I'm not looking to take any more risk than I have to. I'll come back on Monday and figure it out then. So I hope you find this helpful. Again, like, subscribe, share with your friends. Would love to build this YouTube channel a little bit if you find this helpful. And as it grows, I'll make more videos, right? All right. You guys have a great day.